What is going on, everyone? Happy Sunday. Let me know how this mic sounds. I have a new mic set up, as you might be able to see in the corner, but let me know how this sounds because before we get really going, I want to make sure that everything sounds good. I think I did some tests. It should be okay, but that said, we're going to go live here. We're going to be talking about some of the top stocks we're watching for this upcoming week. When we are filming this video here, it is Sunday evening, and we're looking at futures right now, red across the board. We finished the week last week fairly red, Thursday, Friday, and so I'm not surprised that we're going to see some red bleeding over into the early part of this week at a minimum. So, that's kind of what we're looking at as of right now. The trend was last week was pretty red. And so we're looking at the VIX right here, barely elevated, but everything is just slightly red. It's not too bad, just about 0.25%. The only thing is small caps looking like they are about, 0.5% in the red in terms of the Russell. That didn't look good, to be completely honest. The Russell, the way IWM finished up last week. But that said, how is crude oil doing? We'll take a look at crude oil, take a look at a bunch of different things, and then we'll dive into some stocks and the overall charts, and obviously how we're setting things on up. CCI, VIC, we can take a peek at that in just 1 second. Okay, so crude oil we got pulled up right here. How is it doing? It's sitting at 71 or so. It doesn't look great. It has been downtrending a little bit as of late, but you would like to see it holding up here in the low 70s for it to make that next bounce. But obviously, it has made quite a run recently, so we'll see if that does want to hold up. If not, it is what it is. So we'll see how this plays out. But here's the daily chart on crude oil. Remember when it went negative back in 2020 in April? That was nuts. Crazy run since. I mean, you have some people in the industry who are calling for it to be 125 from some of the articles and some things that I have personally been seeing. But that said, let us dive on into some stocks. Okay, so futures looking a little bit red. It's all good. It's all good. We'll take a look at SPY right now. How did SPY finish the week? We'll see how this bad boy finished on up. S&P 500 ETF. This is it right here. It didn't look good. I mean, let's be honest, right? If we're going to take a look at SPY, we zoom on out, and yeah, we kind of topped out right here and then selling off on Friday. Pretty good. Pretty big sell-off Friday, closing down towards the low of the days. Generally speaking, when you get that type of move, you generally will see that followed by, continuation to the downside as you see a pretty strong close to the downside. So that's what we're watching, at least right now on SPY. I think that's going to be a big player, obviously determining how a lot of stocks do this week, early on at least. Here's IWM. Yeah, small caps, you like trading penny stocks? Well, you know what? Maybe you want to rethink that if this starts to crack and continues to really just dump out to the downside, because look at this. IWM is sitting right at a really good support right here. If it does drop below, let's look down towards that 212 and 210. I would say between 208 and 210, would be the next level to watch if it does fall below 212. So let's see if it holds up down there. Why is that? Was because that was some of the lows that we saw back in here. So if this area ends up holding up on IWM, I wouldn't be surprised. So if it does crack this trend, it is what it is. There's a really big breakout looming at some point in the future up over this 235. So that's that. Sound too low? I'll turn it up a little bit. Turn it up a little bit. How does that sound? Let me know. I should have OBS is telling me that we got, we're up in the yellow at least on this. So we'll see if that sounds better. I can turn it up a little bit more. Can't hear you. Okay, well, I don't know. It says I'm seeing. Okay, if I turn this up all the way, let me know how that sounds. This is up on my end. This is up on here. So let me know if that sounds good. Okay. So IWM, let's look at QQQ. Let's look at tech. QQQ, way better. Awesome. Loud, too loud. Too loud. I'll touch it down a tiny bit, but hopefully that's good. So QQQ, we're looking at right now. I think it's also a super sensitive mic, so I got to figure out kind of like the settings and stuff. Well, when I'm editing a video, right, I can probably play with it better, but with live, it's a little bit more difficult to figure that out. Okay, so the 365 is where we hit up on QQQ. And now it's pulling back a little bit, kind of with, SPY pulled back a little bit. QQQ pulling back. Tech is pulling back. So I'm curious to see how futures right now are down. So I'm curious to see how this plays out. Monday, Tuesday could be down days, and then we could rebound into the end of the week. We will see. Okay. All right. Sounds good. Metamaterials, MMAT. Awesome. Let's see. Let's take a look at MMAT. And then we got CCIV to take a peek at. And then I have a bunch of stocks that I'm watching from last week as well. This is getting down to a decent spot. Here's the thing. I would like to see it holding up around that 350 or so. if 350 can't hold on metamaterials, then I would just probably give it some time. This is an interesting play. I think a lot of people are kind of waiting for this to rebound, waiting for some more news from them. I think we'll probably get something at some point. I'm not in it. I want to see how it handles that 350 a little bit. So I would probably say if you're in it right here, maybe give it a 350, falls below that level, maybe you cut it and reassess, come back to it if it starts to hold back up. But you're going to risk yourself, 15 cents or so from where it's at right now, which is a decent risk reward in my opinion. So that is that. Let's see. Outside of metamaterials, CCIV is another one we're going to take a peek at because this is one that's been also a popular stock for sure. CCIV, key level to watch is down around 20 bucks or 21 it looks like as of right now. But this is going to be one that we're going to be watching going forward. I do like CCIV. And I'm thinking about changing my style completely. But like you guys, for those who know, I generally like to swing small caps. And right now it's not a great time to do so. We see how IWM is doing. If you go back about 2 minutes, we talked about IWM, the Russell, how small caps. It's not doing great. And generally speaking, end of July into August, it's a period of time where things are pretty slow, right, for small caps. And that's fine. And if the market stays hot and it heats up further, right, then things can change. But right now, last week, the week before, I think was pretty key. If you weren't in the names that ran, and you were holding some other swings, you're feeling it, right? It wasn't great. So I'm thinking about probably taking some on these bigger pullbacks in the broader market, finding some of these beat down names. For example, I wouldn't say CCIV is a beat down name. Obviously, from where it was trading at a couple months ago, yeah, it seems beat down. But I think CCIV down here in the low 20s is a really good spot. Personally, for me, I might look to start taking some larger cap swings. Not that CCIV is like a mega, massive stock. It's still going to have its volatility, but I'm looking at maybe like a CCIV, maybe like Penn, maybe SoFi, Wish even. As they come down, if the market stays, a little rocky the first half of this week, I might take a larger size on some larger names and just swing some of those for some rebounds while small caps do their thing. And I have a couple small caps that I'm holding, and that's really it. I'm sitting half cash, half my account is in those small cap swings, but they're kind of, dialed into what I like. And then, everything else, I'm leaving as free cash for the ability to do what I want. So I'm thinking that obviously, as things are slow, let's not try to lose it and try to force small caps and take advantage of the opportunity. So I think there's better opportunities on some bigger, broader market dips we can take advantage of. CCIV, I kind of like. What's going to happen to AHT? ELAS, we'll talk about that in a second. AHT the split should be now done. So this should be trading at like $18 come tomorrow. It should be trading up at like 18 bucks. So the reverse split was a go, or was completed, I guess, at the end of the day on Friday. And so AHT should be trading at 18 bucks. It just means that your shares will kind of correlate. So it's not like you're all of a sudden going to make so much money in this trade, but they reverse stock split 1 for 10 or whatever it is. So $1.82 is going to turn into $18.20. Obviously, there will be price action changes. So if AHT does dip a decent amount from that 18 level, so for example, if AHT comes down closer to like $15, then I'm really, really interested for a swing. So I might take that as well for a possible swing. Probably smaller size there, but I might take that for a swing, get back in. It was one that I was stupid and I bought it way too high up, but that was, my mistake, and it is what it is. ELYS, I literally don't even think that there's like, to me, there's not too much to talk about here because it's just, for me, it's a longer hold. Roughly, yeah, I guess you can draw a little down, try and kind of on that ELYS chart, try to break above, and it got rejected. We got some resistance up here, 450, and then up towards 485, $5 will be some areas to watch for ELYS. I have some small sell orders set for those levels in case it pops there, and then it dips back down, and I can rebuy those shares. But I'm looking to hold a larger portion of my shares for a much bigger move. That's personally what I'm doing. ELYS expanding into the U.S. Here's the only thing with ELYS that I do want to point out, and we could pull it up. Let's see if I can pull it up on BAM SEC really quick. But if you go to BAM SEC, what you'll see is you will see a shelf registration. So they have an S3 on file, so they have the ability to do a $100 million offering. That's on file. That was filed in early June, so just about a month and a half ago. The reason why I say that is because that's the downside risk here. However, in my opinion, this is not necessarily a small cap like penny stock playing for the pump and dump and getting out and moving on. It's playing this one for a bigger move. If they utilize that offering, which they eventually they probably will, but if and when they utilize that, I would imagine that is going to be done really in a proper way. If you kind of get what I'm saying, like they're going to be doing that for expansion and not just to kind of pad their pockets, from what it seems like. So they're expanding into the U.S. They should have some news very, very soon about their Washington, D.C., I believe, bar or whatever their technology will be unveiled in or brought out to and utilized there. And then from there, I expect it to kind of progress. I think it's also setting up to be a really good time as they're expanding into the U.S. going into football season. I think this is actually a really good football season swing. Sports betting play. Also, big in Italy. Italy just won. So understand that now I would imagine we're going to see some of those numbers bumping on up. Users, bets, and all that type of stuff would probably be padding their numbers going forward. So I like that. And speaking of some of the sports betting plays, a larger cap name is Penn. I have some lottery options on Penn. So I bought these options. I believe they were $70 strike price. I have like a couple $100 in them, and that's it. So it's like, okay, either these are going to double or they're going to expire worthless. And if Penn opens up tomorrow and it gaps down and it drops down to like $60, then yeah, I'll probably dump them because I want to at least salvage some value there. Because then the chances of them hitting are probably very, very low. But I still think Penn is one of those stocks that could be setting up for a reversal at some point in the near future. It's been pretty consistently, selling off ever since the big run to 142, which, hey, it made a crazy run. I get it. But Penn going into football season, I think this is going to be a really good play. Barstool Sportsbook, if you guys don't know. Penn National Gaming. Also, DraftKings, another sports betting stock. They're more out there. These are kind of like Penn and DraftKings are like the two kind of like leaders in the sector, if you will. And so DraftKings is coming down as well. These are types of plays that, to be honest, is where I'm thinking that as we go into August, as we get leading up to football season, if the market wants to give us some more dips, I like, Penn. I like DraftKings. ELYS is a longer hold penny stock play. It's undervalued, in my opinion, based on their trading, their valuation and where their trading multiple is at based on, some other these companies. Obviously, DraftKings and Penn, different story, different beasts. You can't really compare the two in terms of their multiples, but still, I like this one a lot. DraftKings is one that I do like as well. So DraftKings right here, the lower it goes, you know what? This is not something that I wouldn't be opposed to taking a larger chunk of my portfolio and feeling confident where I don't want to say I would be breaking my rules by going in with larger than 10% of my account into one stock. But if DraftKings sells off massively and it gets down sub 40, I'm going to be very hard pressed not to want to take a shot at that going into football season, personally. If the market dips and gives us some good dips, I think that's, at that point we're getting to be, somewhat undervalued in my opinion on DraftKings. It made a crazy run. Yep, now it's pulling back and we're setting up for a nice little pop back to the upside or even just a slower grind back up, putting in higher lows. If we take a look at the chart here on DraftKings, right, we're still kind of uptrending roughly, not perfect, but, roughly speaking, if we hold up roughly around this area in the low 40s, we're kind of holding that trend, putting in higher lows and so forth. So that is that. INTZ, this is one that I believe I have, if I'm not mistaken. Yes, I grabbed some at the $9 support. I gave it down. It did dip below 9. It dipped down below to like 860 or something like that, but I gave it the leeway because it happened back here. And so, I have some. I sold some because it popped, and it's not something that I was super, I guess, I didn't do enough research personally. I like the chart. It was more so I like the chart. I briefly looked at it, said, hey, this is a decent idea. I'll take a shot at it. And so now I have pretty much taken half my position off, and I'll let the rest ride. If it drops below 9 again, or 850 or 861, wherever it fell to, I'll cut it. At this point, it won't be a red trade for me. So I've already locked in some gains, but I think it has a lot of range back up. It has quite the range to the upside. Very volatile one though, to be honest. So if you're not used to to volatility, this is definitely one that is volatile. You can see a nice move in of 50 cents like that. So just be aware if you're looking at this one, but it does have some good support. Look at that double bottom. I mean, beautiful. Fell down here, held up around 9, did it again, boom. But the time it bounced back, it pretty much doubled. It went from 9 to over 18. So, this is the type of play that could, double like that and no one's even watching, right? Because it's very thin from how I was watching it last week. So that one's awesome. Let's see. EOYS, yeah, had a nice day on Friday. I was happy to see that with the market being so red. It had a really good day, which I was surprised. And generally, that's you're finding some strength in an overall, I guess, red market, at least for right now. That's good to see. And as we speak, and I do want to say, as we speak, we are seeing futures dipping a little bit lower. So small caps down a little more. We have tech, down a little over 0.25% across the board. We have SPY, S&P, and the Dow would be also down a little bit more as well. So yeah, it's not, honestly, I'm not surprised. I mean, if we just look at how we finished up, again, for those who are jumping in now, if we look at SPY, the S&P, why does it go to SPY? It closed down pretty low. This looks like it's setting up for, one of those kind of, okay, we hit the top here at 437. Let's pull back a couple points, 10, 20 points, wouldn't be the end of the world. If you think about the reality of a 20-point pullback on SPY from the highs, 20-point pullback would be down towards 417, right? It's 5%, not even a 5% pullback. And at that point, we'd probably bounce and it would be a decent, recovery. What I want to see though on SPY, to be honest, personally, this is of course, who knows how this is going to play out, but what I'd like to see is maybe something like that and then a bounce like this, and then maybe like a pullback again, but like more of this kind of like consolidation and slower move to the upside. Rather than if we start to zoom out, look at how accelerated the slope of this chart is. It's not sustainable. It really isn't. So I'm looking at thinking that I want to see something along those lines. Those are just some drawings. Obviously, who knows what's going to happen, but it wouldn't be the end of the world if we saw SPY dipping back down to the mid sub 420ish or 420 or so, and then bouncing around between 410, 420, 430, and then eventually the next couple of months, maybe back into the winter if inflation fears do kind of wane out. Well, who knows? Maybe it's worse than we thought, right? Which I think a lot of people are speculating is going to be the case. If it doesn't pan out to be as bad as people are thinking now or whatever, SPY puts up a new high a couple months later. So I want to see something like that. I think if we see SPY cooling off and the overall indices cooling off, then that's the opportunity for IWM. I think for it to push up and to have its moment of glory. I think IWM will be setting up for something along those lines. So IWM on this for small caps, watching it down here towards the 210 to 208. If IWM down into the sub 210, I think it's a good dip buy personally for some small caps. So if your swings have been taking some hits, you know what, it is what it is, but you got to be a little more patient, a little more cautious on what you're buying. Don't be just buying something just because. For example, this, I'll pull up a stock that a lot of people like, ATOS. Here it is. It's down at 450. Look at this. This thing had a terrible day on Friday. This is one of those stocks that I know it had a crazy run hitting almost $10, right? I know it had a crazy run, but I could easily see this thing down sub $2 like this if we continue to see small caps. This is an example of a chart that personally, when the market's not there for small caps into the summer months, I just don't want to see it. Because if you go back to what happened last time, look what happened, right? Spring, it did really well. It went from 75 cents. It pushed up into the July and even the beginning of August. It hit up to just about $5. Then it went on this run from $5 and it went all the way down, did some offerings on the way, down sub $1. Do you want to be holding a stock from $5 to sub 1? Only to, and if you picked right, you have a good play later on. Obviously, you got to have some diamond hands to hold through that entire thing. So there's probably a better way to manage that where you can take some profits off the table if you're in ATOS and the thing starts to pull back. I wouldn't be surprised if this thing comes down and really settles down sub $2 in the next couple of months. That will be a really good opportunity, I think, for another rebound play into the winter and into the spring of next year. But that's the thing, right? When the market's not there, you just have to kind of start to realize that and understand that we don't have to, ride these all the way or hold these all the way down. We can either make money on the way down or limit our downside risk and come back to these guys when they are bottomed out, as they're, it's done it before where it kind of comes down and really bottoms out, and then there's opportunity from there. Okay. Let's see. I'm going to scroll back on through. What do you think about buying leverage inverse ETFs? Yeah, I think it's a good idea. Here's what I would do that if we have a huge red day. That's where I would kind of think about it. For example, like SPY or buying like, what's it, TQQQ? TQQQ, this is like the 3X leveraged QQQ ETF. This one's actually really good. So like, for example, right, if QQQ moves like 1%, this thing, how much did this thing move? It moved like 6% the past couple of days off the highs. So like, sorry if you guys can hear the sirens, but like if this thing pulls back really hard down to, let's say, like 110 next couple of days, you know, whatever, then you can look, and you're looking for a balance on the overall indices, you know, and things continue to be as strong as they have been. These are really good to play for, you know, reversals to the upside. Even just, here's the thing, you don't even have to play this with options. Play it with just shares. You know, you can probably get a 5, 10, 20% move on just shares fairly, I don't want to say easily, that's not the best word to use, but you can do that. If you have to be timed on the leverage ETFs, you have to kind of time it right. So be cautious there. If it's a day trade, yeah, you could utilize options or just play shares if you don't want to have that option risk, or play in the money options. They're going to be more expensive, but they're not going to be kind of like as binary in a sense, which when I've been playing options lately, that's what I've been doing. mRNA is one that I played options on last week. Had a great day. Obviously, this thing, S&P 500, you know, it joined the S&P 500. I would be surprised. I would be ready for a pullback on mRNA, although I don't want to fight it, but I wouldn't be surprised if we see a pullback in the target area I would be looking at on mRNA would be this gap right here. Let's draw that box in. So when we come across it next week, if I want to play it, or if it gets into that gap, that could be a time to go long if it pulls back down to those levels. But I've been playing in the money options. So I go to the option chain, and let's say I want to play, let's say for mRNA, I think it's going to go to 300, okay, this week. I'll go ahead and I'll buy like the 280 calls. They're going to cost me about $1,500 right now, or $1,400 for one contract. But I'm not necessarily as high of a risk of this expiring worthless. So even if this thing ends up closing the week around where it's at right here, it's still going to have a couple $100 of value. However, if I said, okay, I'm targeting $300 on mRNA by Friday, well, I can go and buy the $300 calls. They're going to cost me about $600, so it's going to cost me roughly half, which is great. I don't have to pay as much now, or I can buy 2 contracts, maybe, or I can buy, you know, more contracts, depending upon your size and how you want to play it, right? But what if mRNA gets up to like 300 and it hits 300 exactly on Friday? Well, this contract is pretty much like, it's going to have like minimal value. So you just blew $600. That's why I kind of like the in the money plays for some of those moves. At least it's a little bit less risky in my opinion. You can go a little bit heavier size on some of those. Just generally how I've been seeing it on the option front. Personally, what I like to do, everyone's different though. If you can time the move though, if that move happens, if mRNA opens up tomorrow and it goes to 300 tomorrow, those $6 premiums will be like, you know, $12, $15. You'll double your money in one day. So that's the thing. So we'll see. BFI, this could be another swing. This thing really had a nice day off the 9 or off that $10 kind of area. It bounced really nicely. This could be one that I'm looking at for tossing a chunk of the account and just swinging some for the next couple of weeks. I think that's what I'm doing. I'm going away on Wednesday, traveling. So be away with family and stuff for like a week and a half. So I'm not going to be, you know, ideally holding too many long positions that I'm not already comfortable with, or adding much else new. What do you use as a stock scanner? I generally speaking, when I'm looking for stocks, like if I'm just looking for stocks to trade, I'll go to finviz.com at night, during the day, and weekends, whatever. Use an ad blocker. By the way, they have a ton of ads. If you're not going to pay for the premium version, which it could be worth it for you depending upon, you know, what you want. If you're not going to pay for the elite, I mean. There's a link down below. I link all the resources that I use. If you're not going to pay for that, use an ad blocker because it's super annoying. But I'll screen for stocks here, and I have some videos on the channel. There should be a playlist going over how to find stocks to trade, something along those lines. I have a video or multiple videos diving into a bunch of different strategies that I'll use. But I generally will use this and go from there, and then I'll look at charts. So I'll just pull up the chart feature, and if a chart catches my eye, then I take a peek at it, and I'll dive deeper into it. But the way I trade generally is chart first, and then I dive into the company. So I don't want to even touch a company or look at a company, even though it could be the most undervalued thing ever. That's a different story, I guess. That's more of like a longer term investment idea. But generally speaking, if the chart doesn't look good, if I can't identify a pretty clean risk reward ratio, hey, we're looking at a pretty low risk here based on the support levels I'm looking at, and, you know, decent reward. If I can't identify good risk reward on the chart, I don't even care about it. for a trade. For a longer term investment, different story. I'll buy something that I like, for example, like Tesla. You know, buy some Tesla and forget about it for a couple of years. Like, you know what I mean? But you know, generally speaking, this is how I'll go about finding stocks. Trade idea UVXY. Also for a scanner, I also have trade ideas. There's a link down below for that as well. I don't mean to plug all this stuff, but it's stuff that I use. So I leave it's the resources tab is literally what I use in the descriptions of my videos. But I have access to trade ideas. So scanning for stocks that hit new highs of the day, drops when news drops, you get that news release up on the screen. It's nice to have. It's really, if you're more of an active trader, it's more useful. By no means, I didn't really use that for the first like 2 years that I was like getting into this stuff. So you don't need it, but it could be helpful as you progress. UVXY, I've been watching, playing this since we talked about SVXY. Yeah, I kind of want to see, let's take a look at UVXY. I want to see, for me, for some of these things, like, you know, this is setting up pretty nice, it looks like, too. I would like to see UVXY, you know, it didn't really make a big enough pop on Friday, but if this thing really pops, you know, one day this week, then short the VIX, right, type of idea, then SVXY is your play again, right? If you're confident in, you know, the market coming back from those dips, then SVXY is your play. So for those who aren't familiar, if you scroll back on the community tab on the channel, you'll probably find some posts about SVXY. I believe it was back in here. And it was like when we saw a volatility spike, we saw some pullbacks, some short-term fear in the markets. What happens is SVXY comes down, and then when UVXY goes up, this goes down. Think of, they're like inverses almost in a sense. And then when you see that volatility, right, you could see a pretty hard pullback in the market. We don't have to, like, SPY doesn't have to go back up and hit new highs for this to recover. All you need is that fear, that volatility to kind of like slow down. You can still see like SPY, you know, staying relatively low, and this will recover, you know, it'll kind of slowly grind its way back on up. So if we get a really hard pullback on SVXY or a really good spike in volatility, then I would look to position myself in SVXY. So I'm kind of actually looking at that as an idea too, for like a swing idea. If we see a really good pullback, start, you know, if this thing comes down sub 50 again, which is possible, if it comes down sub 50, it's where I might just take a little bit, take a chunk of cash and toss it in here, looking for a rebound back to like 55, you know, in the next like 2 weeks, you know, and give it some time. Obviously, if the market rips right back to the upside, this can recover like in a day or two. But this is more of like I think it's more of a swing, less like risky. If you're playing options, different story. You're taking on more risk here, but you can play with heavier size. And if you think about it, right, last time this thing dipped down, I think we took advantage of it. I pointed it out as an idea, and I don't think I got it down here. I was like around 45, 46. But from 46 to 50 was roughly the trade that I had. It was like a 9% trade, you know, in like 2-3 days. It's not bad. You know, it's not that bad. And if you take, you know, a decent chunk of your portfolio, because depending upon how you manage your risk, it's a decent trade, a decent little return. In the meantime, when, you know, you can kind of play the bottom of the volatility in a sense. So I like that idea too. That's one to watch. There's honestly, there's a lot of ideas. So you gotta, I think one of the things that I've gotten a lot better at lately too is I traditionally play small caps, and it sucks sometimes when you go into the summer months and it slows down. Yeah, sure. But there's other stuff you can trade too. You don't need to be in. So what I did is I just went half cash, half my small cap positions, and the ones that I'm in, I like them. I'm holding them. Some of them I have a little bit longer of a time horizon. Some of them I think are good values right now as it is, and some are low floats at bottoms. So that's that. But I'm not gonna expose myself or take on more risk than I need to and expose myself with more than half my account. Because like last year, to be honest, I think last year at this time, my portfolio took a pretty substantial hit percentage-wise speaking, because I was like 80% in the market into August. I didn't need to be 80% in the market. Yeah, we had a crazy couple months after that, but I was too exposed, so I lost more, I guess, unrealized losses, but I gave back more than I needed to, when I could have waited and come back in September and grabbed all those stocks for, you know, a decent discount and just reloaded them and had them back and ready for the fall. So there's other opportunities is what I'm trying to get my point across, I guess. Let's see. NTLA said plenty of room to come down. Let's take a look at that. I do remember that. NTLA 135. Look at that. That was nice. And this could even come down more. It's got a really decent gap down. If the market gets weak, this is not a bad idea to. Obviously, we had like 5 red days in a row, so maybe maybe chances here that we get a little pop. But if this thing pops up again, this could be an overall a little bit of a pullback or a slower bleed back down to $100 before a potential reversal. I don't know again the details of what's going on super well behind the scenes, but it seems volatile enough to play options on, or just to even play shares is volatile enough for shares. It was up 100% in like a week, so. That's a good stock to be watching. I like it. If it holds up in the 125, 130 area, that should be the area it finds support right now. But if it can't hold that and it falls below 125, we could see this thing down towards $100 pretty quick. Holdings are now BurgerFi, Body, OEG, Coin. I think Coin's decently setting up too. How is Coin looking these days? Yeah, I mean, I think it's not a terrible idea. If you're bullish on crypto longer term too, I mean, putting in higher lows, you're bottomed out right here. This is a decent play as well. $200 holds. That's great. If it holds, you're risking $25 to the downside, but upside here, you're looking for, I think, a lot more upside. But yeah, it's going to take some. I think take some time. If crypto wants to come back strong into the winter, which I think people are, those who are, I guess, crypto guys or whatever you want to say it. Some are saying that expect crypto heat back up into the fall and winter. We'll see if that happens as like the next bull run push, or that next continuation of the cycle. We'll see. But yeah, I mean, that's something I'll be watching for. But Coin looks like it's setting up. I think Coin's one that I would probably toss away into a longer term account and not really want to look at every single day. But I do kind of like the idea. As inflation takes shape, rates rise, moving into Citibank. Yeah, the banks. That is interesting. What a Citigroup. I'm curious to see how those play out, how some of the banks set up. Also, what I've been noticing too is CCL, Carnival Cruise. Look at this. I think they had some good news out too last week. Carnival Cruise, man, this thing really got going. It got up to the low 30s, which was pretty impressive in my opinion. And then it's taken a dive the past couple of days. I don't know if there's more news, but from what I saw, if I recall correctly, some headlines or an article that I saw, they had decent interest. I think it was they were looking at higher interest right now than what they saw at like 2019, if I'm not mistaken, and the stock's coming down. This could be setting up again for a reversal. If this thing goes sub 20, this wouldn't be a terrible. I mean, I might even grab some of this for even for an idea, for a swing idea. It's been taking a hit with the market, but here's another thing to watch too. When you see a sell-off, I'm really interested to see how tomorrow goes and this week goes, because there's a lot of names that are underlying in the indices, or the indices are pulling back a little bit off their highs. I mean, they're still, relatively speaking, we're still like at all-time highs. Like within 2 days, we can hit a new high on SPY and QQQ and the Dow, whatever, right? But CCL is a name that pulled back, travel name. Now, personally speaking, I'm not sure I would, really want to go on a cruise. But again, I think that they're seeing decent demand from that article that I saw. But you just saw a pretty hard pull. You had, 5 down days in a row. Then on the 6th down day, you had a really big extension down, a really hard sell to the downside. Volume pushed up a little bit, so we saw increased volume on that sell-off. I would be curious to see if this was a volume exhaust, where you kind of see in some of these trends on sell-offs and even push to the upside, you get like a volume exhaust where you'll have one final day where it's like a big flush out, the final dump, and then buyers come back in the next day, or then the reversal, or then sellers come back in if it's a stock that was moving up. So I'm curious to see if $20 can hold up on CCL and if buyers come back in. If so, this could be even a play that goes from 20 to 25. If 20 holds, this can go from like 21 to 25. Let's take a look. What's that? You're looking at 20%, like that. It could bounce back up 20% in like a week. So it's something to watch. Actually, that was the weekly chart. Sorry, that was a weekly chart too. This is the daily on it. So yeah, the daily is even more. It seems like even more oversold. If I had to, take a peek. Yeah, definitely. I think this could be setting up at some point. I mean, I'm not a huge fan, to be honest. I never touched these things. They were great plays from the sub 10. I never touched a lot of the cruise lines and even the airlines, but they seem like they could be setting up. American Airlines has pulled back a decent bit lately as well. Roughly speaking, if AAL holds up roughly right in here, this $20 range down towards like $19.50, if it holds up there, this could be even one to watch as well for a nice $5, a $5 swing into the fall. It's just something to watch as the market is, if the market bleeds out a little bit more, there's going to be some names that take some bigger hits. I do also want to talk about SoFi. This is one that I'm thinking about adding to not only the Roth IRA, but also just even for a summer swing here for the rest of the summer, because SoFi is one of those that's also getting some attention on Wall Street Bets. It's a high short interest. Let's take a look at actually the short interest right now on SoFi on FinViz. Let's pull it up. We got 41% short. So what this is telling me is that you're pretty much like any day you could wake up, and if like the Wall Street Bet crew wants to take a stock, like we've seen it happen before, and SoFi is the target almost, this thing can go 10, 20% like that. So this is one that down towards 15. I mean, there's some good support here down towards 14.50 as well. This is getting down to a really good range. I like, for the long term, I like this box. So anything under $18, I like it for the long term. But even just for the short term, this is looking pretty good. Last time we came down to this range, down sub 15, and we haven't gone sub 15 just yet the past couple of weeks. Last time we came down here, what do we see? SoFi went from like 14.50 to 25. It was up 71% in like 2-3 weeks. So I wouldn't be opposed to something like that, on SoFi. Also, the volume here is intriguing. We've been selling off pretty substantially, but look at the volume. The volume on the bottom of the screen is very interesting. I think it's just because you're seeing a lot more attention on Wall Street Bets, if I'm not mistaken. But that said, volume precedes price. So we're seeing heavy volume right here. People are loading up, or people are getting bagged. Obviously, if you bought it up here, you're getting bagged, I guess. But longer term, I don't think that's going to be the case. But give it a couple months, couple of years, and we'll have to reassess. But I think it's coming down to a really nice level. So SoFi is one for a reversal I like. I would not be opposed to taking this one, and I might if we see a really hard pullback tomorrow. And as we speak, futures are coming back a little bit. Tech coming back up a little bit. If we see a hard pullback tomorrow in a couple names, and SoFi opens up sub 15, I might grab some. I might throw in a chunk of a position into SoFi and look to kind of take it easy the next couple of days and look for it to do its thing. We'll see. Oil plays, HUSA, CEI, USCG. Yeah, HUSA is a fun one. Not HUSN. HUSA, sorry. HUSA. It's right back down to the same spot. The only thing I will say about oil, though, is take a look at this. Here's crude oil. Let's look at the 1 hour chart on crude oil. Crude oil is down here. I would like to see crude oil bouncing, but if crude oil kind of falls below 71 or even 70, just look out in the short term for some of those names. So they could see some more sell-offs. That's all I'm watching on crude oil. But if crude oil holds up low 70s, this is a good bounce zone, I think. If crude oil holds up low 70s, these names, HUSA, HUSA, under $2 has been a really good play. Under $2, set your sells, $2.25, $2.50, $3. Some good till canceled sells. And if you're not paying attention, this thing, it's such a low float, it could get run easily, right? Like it did a couple days ago. That's one that I would be watching, HUSA. Then there's USEG as well. Similar story there. USEG went absolutely bonkers, went up to $8, came right back down to $4. It's literally right back at $4. You have to give these a little bit of a leash, a little bit of a longer leash, because they are volatile. And so because there's such a low float, USEG could bump down to like 350 in a second. Either you have bid set or you're looking to buy it at that point, or set some alerts. So for example, on this one, what I might do is set an alert, and I might do it right now. I'm going to set an alert. Where is it? Create an alert. Okay, here it is. I'm going to set an alert. So if this thing goes below $4, it's going to alert me, which is good. So if it happens, it'll alert me once a day, blah, blah, blah. Okay, great. So sub 4 would put me in a really good risk reward, because $4, that's going to put me down here. I mean, we're looking at pretty much, we zoom out again, pretty much like the bottom. I mean, this thing came down to like 365. It did dip down. I think that was post offering right there. It dipped down to like $3. But sub 4 risk reward wise, based on this chart with oil staying high and it's being such a low float, has that history of running a couple days ago, I think it's a good deal. You got to be patient on it though, just for, make sure you're patient. Don't be, dumping your entire account in and just letting it, bleed out if it does bleed out. But it's one to watch. I wouldn't be surprised if we see sub 4 in the short term. And that's a good spot. And then CEI is another one too. I like CEI a lot. This is getting down to super crazy low levels. CEI just completed or is about to complete or roughly around the Viking Energy merger. 55 million market cap, so tiny market cap. We have a 25. The float I think is larger than that. I think it's around 100 million if I'm not mistaken. So maybe this number is a little bit off. But we're looking at a pretty small market cap play down towards 50 cents. This thing hasn't been down here since end of August last year, right? So again, I'm going to be cautious here to a degree because look what happened again end of August last year. CEI, it went from, well over 1 and it fell like literally the entire month of August. It was down like almost every day and it came down to 45. So if it can't hold 50 and it dumps to 45, that's a spot I'll add. But if it can't hold 45 and the market's really not setting up for a lot of these penny stock plays, then I'll probably cut it because I'm going to risk a little bit here. I might cut it or leave like a small position on just to stay familiar with it. I might cut it because I don't want to be the one holding it all the way down. If I leave a small position on, then I'm fine holding it all the way down on something like that just so I'm familiar, just so I can see it in the account, so I can pay attention to it, what's going on, look into their news, look into their filings. If I see something that I like, then I can be adding heavier. Or if I see it start to firm up, then that's where I'll be adding potentially heavier on a play like that. But also, I don't think the volume is going to lie here. Look at this. The volume has been increasing. Yeah, I think they've been diluting some shares, I believe. But the volume has been increasing. So it's something that I'd be watching for sure. Volume precedes price. We're seeing the stock kind of pulling back a little bit here, but the volume's been pushing up. So I'm waiting to see if we get a bigger move. We had some pops. I think CEI is one where I would set some sells, 70, maybe 67 cents, 75 cents, 83 cents. Set some sells up every 5-10 cents over 60 and trim something off if it pops and then rebuy those shares back down under 60 cents if possible. It's kind of how I've been playing it as of late. But it's one of the ones that I have, keeping it familiar. I think one of the other things to do too is if you have too many plays, too many stocks in front of you, it's very easy to kind of lose track. And so having less positions makes it easy to do something like that. So for CEI, since I've been following it, yeah, okay, the stock could be downtrending, but you can also be making money in a downtrend or minimizing your losses in a downtrend when you're looking for a bigger picture move. Ideally, I still think this is going to go up. I still want to see $1 on this thing at some point. It may not happen until the fall. I'm willing to hold it kind of through the ups and downs right now to get to that type of play because I know the history here and I believe in this one a little bit more than let's say like a random stock. But make sure that you're not being stupid across the next couple of months if it does continue to sell off. All right, let's see. BNGO. We can pull up BNGO and see how that guy is looking. This one is, you're down a lot. Here's my only concern is that if you're down a lot in BNGO, number one, I think you may have gotten a little caught up in the hype, which is okay. It happens all the time. Everyone has issues with that. But we are coming down to a decent spot. Chart-wise, down towards $5 is looking really good. So it's not a bad spot in my opinion right now on BNGO. Down towards this $5 area. It did dip below in May to 430-ish and then recovered quite nicely after that. So this is one to have on the list as well for even a possible swing, but it's been selling off quite a bit. It's got a lot of attention. I wouldn't be surprised if it holds up around 5 and bounces. The problem here is that if you did, right, this thing was a 50-cent stock. Let's understand that. It went from 50 cents at, looks like, let's say, the end of 2020, from just about 50 cents to $15, okay, up 3,000% in 2 months, 2.5 months. So I think that's one of those plays. This is not an OTC stock. OTC stocks, different story. Those can be crazy volatile. This is a stock that's not in the OTC. I believe it's a NASDAQ. Is it on the NASDAQ? BNGO, where is it? It's on the NASDAQ. Yeah. Trades on the NASDAQ, and it went up 3,000% in 2.5 months. Yep, I understand the speculation, genomics and all that stuff, but what actually changed fundamentally with the company? A lot of that stuff, to be honest, there was some stuff with the Sapphire, and I don't know the whole details, but not like too much to that degree where you actually had value backing it up. It was a lot of speculation, and it was a lot of hype, and it was a lot of pricing in the future. So that's all, I think, been priced in. Where it decides to settle out will now start to tell us, okay, what's going to happen. Also, their history hasn't been very great at managing their cash. So that's another thing to watch. I have a lot of lines in here because we watched quite a bit in months back on the crazy run it had up. But down towards $5 could be a decent spot to add to your position to bring your average down. If I was looking at it, I actually would be interested in taking a long position, just fresh eyes, fresh mind. I haven't been like bag holding this thing, or I haven't been in this for a while, and I'm not like skewed. I kind of like it down here if it gets down towards $5 personally. I mean, I'll add it to the list. I'm going to add it to the watch list. BNGO at 5, and I'll come back to it. Let's see. Banks still very overinflated. Body getting real cheap. I just don't even think that this is like, in my opinion, it's stupid, but it doesn't matter. Market comes down, what gets hit doesn't matter. We're seeing, I think it's pretty clear, and this is, in my opinion, these are great opportunities, but also it teaches you again why you want to have cash, because in a situation like this, the rich are going to get richer, right? In a sense, because they had cash, right? Or they're able to buy when those are in some of these stocks from way higher and they're bleeding and they can't add. So if you have cash and you can average down or accumulate some more shares a little bit lower, you can bring your average down substantially. And then when this thing actually runs or it has a decent day, you're feeling great. Ultimately, I think Body's a longer term play. This is Beachbody for those who are not familiar. Recent SPAC. So that just went through. Ticker changed to Body. This was FRX, I believe. Ticker changed to Body. I think this is going to be very similar to like FSR. I mean, it has that same type of look. FSR, let's pull it up. That was Ford. FSR, go back here, was a SPAC. When they officially went live, the ticker changed from SPAQ to FSR. It went from 14 to 8. Then it went from 8 to 24 in the next couple of weeks, next month. Okay? I think we're looking at a very similar situation here with Body. I don't think this thing is going to come down. I mean, could it come down to 5? Sure, it could come down to 5. But at some point, the market's going to turn, and then you want to be ready when things are looking a lot better for speculative plays. Penny stocks, small caps, I would say SPACs, throw them in there, high tech, high growth. They're all kind of encompassing the same thing. You're seeing a lot of them getting hit. When the market's a little bit weak, they're the first ones to go. These are also the ones that have the biggest rebounds. So Body is one, if you want to just toss into like, I don't know, an IRA, a long-term portfolio, scoop something up under $8 and just, I think it's going to be, you'll look back at this one in a couple months, couple years and be like, oh, I'm glad I did that, and didn't really think too much. I would say I would always recommend looking deeper, researching the company. But if you guys know Beachbody, if you heard of Beachbody, you probably already know. You don't have to do too much research to understand what they got going on and what they're all about. August is really slow. Yeah, August is generally really slow. Everyone likes to take their vacations and all that stuff. So just making sure that, in the meantime, we're not blowing gains and blowing cash if we don't need to. CIDM is a good spot right here, or down here towards like lower ones. If it comes down again, it had a little pop to 160. If it comes down towards that like low ones, it's not a bad spot to accumulate some more shares on CIDM. SAM. Catching up through here. Thoughts on SAM? Boston Beer. I have no idea. I have not followed the stock, but what do we got? Roughly kind of a downtrend, kind of something like that, roughly speaking. I think we're getting into a really interesting spot because take a look at this. Prior area of support on the way up back in the second half or the last couple months of 2020. Support was really strong here, just in like the 900 to like 925. was really strong. So anything under 925 seems like a decent buy in my eyes if you're playing it based on that prior area of support. So down towards 9, from 925 to 9 seems like a good buy chart-wise for me. Obviously, I don't know much about the fundamentals here, but look at the volume. Volume has been really elevated as well since May. The volume has been elevated quite a bit. Volume, generally precedes price action, and so it has been selling off a little bit here on this increased volume. So I'm interested to see how this shapes up around this 900 area. CCL, Dow is struggling with the Dow. Yeah, that's true. CCL long term, I'm telling you, I think it's worth a shot. It's worth a shot. We're getting back to this point. Carnival Cruise, for those who are not familiar, Carnival Cruise, that was a pretty nasty sell-off we just saw the past couple of weeks. I think, a lot of it was potentially because we priced in too much. The way that I saw it was this stock was trading up at like 40 plus. Pandemic hits, it goes to 7, right? Okay, great. Then it goes from 7 and it gets back to 30 plus real, I guess, back to normal in a sense, right? Before you kind of get everyone back to normal, before we're seeing the increase and before we're seeing all this stuff, everyone going on cruises again and kind of like full-fledged normalcy, which I think, every day that goes by, we're getting, closer and closer to that. So a lot of these travel stocks, I think it would make sense that now, you would think right now they'd be recovering, but a lot of that was priced in. So because it was priced in prior months, I'm not surprised we're seeing a pullback. Plus the news of the Delta variant and whatnot, I think was also scaring some stuff. I'm interested to see, though, on CCL. I mean, I'm going to toss it on the list as well. Swing idea. Because I kind of like it down here, number one. But number two, I'm looking for a potential volume exhaust where we had a really, we're selling off, and then boom. Friday was a full-on, just full-fledged pull the rug type of day. I mean, it wasn't down like too much. Let's take a look at how much it was down. But from the open to the close, it was down from 2230 to 2080. It was down 6%. That's pretty substantial on CCL. So yeah, it was down. I've been down quite a bit. I think that could have been the last flush out. Meanwhile, look at this. It kind of popped back up at the end of the day. Volume poured in a little bit, and it kind of got a little bit of a rebound. So I'll watch that one into this week. Wouldn't it be fun, right? If you just start thinking about it, like you can kind of just take a step back from a lot of the small caps and the craziness right now. Well, market gets slow, because have some fun. Everyone enjoy the summer. A lot of the funds, they take their time, sell in May, go away is the saying. Don't think that exactly happened this year, but roughly speaking, sell in May and go away. I think it was sell in February and go away, but that's kind of what we saw to a degree. But this is one where it's like, hey, if you want to go to if you're like, the way that I see it is I'm going away to visit some family and going to the beach for about a week. I'm like, well, I'll buy some CCL, take a chunk of CCL and look for a bounce to like 25. And if I get 25, take my profits and move on and just sit back and not have to worry too much about it. On a short-term swing, obviously you can play it for a little bit longer-term move back up to like $30. But I'm interested in accumulating it. If it does fall below $20, I think I'd probably start grabbing some. I would be very hard-pressed not to grab some for the finish of the summer. Ultimately, I want to make sure we're watching the overall markets and how that's playing out too. So, definitely looking to add. I'm sorry, I'm missing stuff. It popped away. Looking to add leaps on SoFi. Yeah, I think that's money personally. Delta. What am I flying? I'm flying United, I think. Delta broke the trend line. Yes. Yep. But yeah, long term this could be good. Yeah, that's the thing. I think we got potentially an opportunity. Maybe it was because of the variant news and whatnot, but I think you have an opportunity on some of these names. If you missed a good chunk of that run back to the upside on a lot of the airlines, cruise lines, you're getting an opportunity, I think, again here. Now, the question is going to be rotation, tech to, let's say, value. I don't know how that plays out, but I think you can, if you're just looking at it more on a fundamental basis. I don't know. I'm seeing a really big demand back for flights again. I don't know about you guys, if you guys have been flying and whatnot, if anyone has lately, but airports are packed, planes are packed. I mean, I think there's, to a degree, talking about pilot shortages. I'm not sure of the extent, but I'm hearing stuff like that, crew, pilot shortages. So they're having issues with that stuff. But I mean, seems like the demand has been roaring back, and from what I could tell. Audio is too low. We had some issues early on. Maybe it's because I'm stepping away. I got a new mic, so we tried to identify the issues early on. Hopefully, it's not too bad. I don't think alerts trigger outside of normal market hours. I don't know. I haven't checked. I believe no. Actually, yeah, it only triggers once it's 9:30 to 4 p.m. on Webull, from what I recall. I believe. I don't know about TOS. Probably similar on TOS. Let's see. BNGO. We talked about that a little bit. Let's see. VJet offering and their low float. Let's take a look at VJet. Sitting, yeah, that's not a. I mean, it did dip down. Let's see. The thing is, we don't have history here, so it fell to 870. Could it? The problem is that could it come down more? Yes. So unless you're really into this fundamentally and you really think it's undervalued right now, that's your play. But right now, I don't know. I just don't know enough about this play, and I would like to see it kind of give it a couple days. Personally, how I would see it if I'm someone on the outside looking in. I haven't been following this one. Give it a couple days, couple weeks. Give it maybe into August, and let's see if we have an August sell-off across, some of these plays. If we see kind of an August sell-off on some of these low floaters, right, maybe you can get this thing down towards like 7 or even 6, maybe even 5. I don't want to throw out random numbers, but you might be able to get it lower, and the chart might shape up where you might see like this type of play where it kind of fades off, and then really hard sells off for a couple weeks. Then it bottoms, and then once it starts to curl, that's your go. That's your sign to go in. And then that's personally how I would look at something like that. Because post-offering, generally speaking, in a hot market, it's good. But right now, we're not in the hottest market. So it's like we're also summer. It's like I would just be cautious to some degree on that idea. XCLA, I personally don't think it's worth holding. If anything, I was potentially going to short this one this week. XCLA, I think, is a stock that could easily come back down sub like 250 pretty quickly. So it's one that I'm looking for if the momentum starts to continue to fade. It's one that's been on my radar to be potentially short. I think that's what I did on Friday. So it's one to watch there. It has held up quite well, but at some point these runs come to an end. I don't think it's going to hold up that much longer. I think it's going to be sub 250 pretty soon. Who knows? It can even go lower. Let's see. Small cap charts look like stairs to the basement. TSA numbers have been steadily going up. Yeah, I mean, I think that's. I don't know how. I just from the outside looking in. I mean, all those travel stocks look like they're with the recent sell-offs. They look like they're decent opportunities again. Seen the small cap squash before, playing the whole hour bounce. I think I don't know, IWM, I think if IWM gets a little shaky, which futures are telling us that it wants to drop a little bit more, this could drop down to the mid to like around that $200 area, sub 210. I think it holds. I don't think it goes below 200. If it goes below 200, that would be really interesting. I don't think it does. But I don't know. We could see this trend line break. It might fall down to 212, 210, 208 pretty fast, and then I'd be looking for a bounce at those points, ideally, but we'll see. Even though if you go back to last year, what do we see? Last summer, what did we get last summer? We got like August, small caps did decent actually into early August, and then from like August, the first week of August into like the end of September, they were generally in a downtrend. Only like, it wasn't that big of a downtrend from these highs. It was down like 10%, which is a decent pullback, but it wasn't like too crazy. Let's take a look at what we are now off the highs on IWM. Off the highs on IWM, I don't think we're even close to that. We're down 7%, so we're decently off the highs. But if it starts going down, like if IWM gets down to be like 10-15% off the highs, would put us down towards like 208 would be 10%, and then 200 would be like 15%. I don't think it goes below that level. I don't think it pulls 15% off the highs, at least in the short term. There'll be bounces along the way, if I had to guess. Had to create my own. Yeah, the alerts thing is interesting. I'm surprised that brokers don't allow you to do that. Don't allow those to get triggered in pre-market. Maybe they do. Let's see. Is it possible if I go to alert, create alert? Is there a way to say like No, I don't think so. Price movement doesn't. No, it doesn't have like a pre-market setting. That's unfortunate. That's stupid though. I kind of would expect that to work in pre-market. Wish is another one as well. I think Wish, with you're seeing their numbers, and this is a decent play as well. This was a heavy retail crowded stock. I think it goes longer term. I think Wish does well long term. Sub 10. I think sub 10 is a good spot. Only thing here is that I know a lot of people were in this thing from like 13 plus because they were like, oh, I got to get in. And the hype was on social media was too real. And now they're riding it all the way down. The problem here is that the big boys who are calling these stocks out on Twitter and whatnot, they have almost, I don't want to say they have unlimited money, but they got money. So they can keep adding to Wish and adding to Wish and adding to Wish as it falls, or they can wait for it and then be able to double down when the thing starts to curl. They can double down on Wish. You probably can't. So even if they're buying Wish at like 13, right, they may have an average right now at like 12, but they can easily get that average down to like $11 like that with some buying volume, with some cash that they have, because a lot of their followers, unfortunately, don't have that cash. So you have to be careful. So if you're buying a stock that you're getting from a call out on social media, you have to understand that it's heavy retail crowded. If the stock pulls back, you're going to see an accelerated sell-off. You're going to see a lot more selling pressure when it comes down because a lot of retail traders were in this thing just following somebody's alert, and eventually it hits a pain point for them where they can't hold it anymore and they cut it. Or I also speculate that it's an easy target for shorts. It's an easy target for funds to short these stocks because it's very easy to manipulate retail trader emotions. When they start seeing these big time accounts, these big time guys calling out a lot of these stocks, it's very easy after let them make their little pop, but when it starts to when the pressure's there, it's very easy to kind of manipulate in a sense on the short side or to the downside because people really start to freak out and they have that emotional attachment. Realize that it's a lot more psychology than you think. And so this is one where I think it could still have one more bigger flush out this week. We'll see. If you get this thing down sub 8, that's the opportunity. If Wish goes sub 8, I'll buy it and just stash it away and not even worry about it. Or maybe I'll buy it in the short-term account and look for kind of a short-term swing. It's also a Wall Street Bets. It's gotten some attention there, so it's a possible squeezer, although it's not really a heavy short float from what I can recall. I don't believe it has a lot of shorts, at least percentage-wise, in it right now, but it could be more manipulated, day to day. It's got 5% short. I don't think it's that big a deal. I mean, looking at their numbers, looking at their revenue and whatnot, I don't think this is a play that's going anywhere longer term, but, it might take some time. Workhorse, bullish or bearish? Let's take a peek. WKHS, Workhorse Group. How is this thing setting up? This is also a high short float, if I recall correctly. It's getting down to let's see if it holds 10. I would like to see it maybe down towards $10. Could be a better spot. Chart's not, I don't know. I'm not a huge fan of it, but the lower it goes, generally speaking, the better I think it's going to be. It's one of those, let's see, it's got 34% short. It can easily be circled back to on Wall Street Bets and get you a 10, 20, getting more than that, get you a 30, 40, 50% squeeze in one day. So the lower it goes, the more I like it. Sub 10 would be awesome, but if you can get it closer to 10, I think it's a better spot personally. Risk reward wise, could it run tomorrow? Yeah, it could. But if things are quiet, the volume has been fading off. If things stay quiet, you're gonna probably get it closer to 10. I think, if I had to guess. Stops aren't active outside normal market hours, which is also annoying. Yes, and that is annoying, but it's also good because a lot of times you can get stopped out on low volume. So hasn't happened to me, but I've freaked out before, in the past where like, oh my gosh, the stock is down 10% in pre-market for what? Like back when we had some really, crazy sell-offs, I believe in March, April of this past year, and we saw a lot of small caps going down big. I believe VISL was one of those examples, which is one of the stocks I'm holding long. VISL, if I'm not mistaken, back here in, I think maybe it was May. One of these days, it was actually, if I go to the 4-hour chart, let's see. I think it'll show me better on the 4-hour. Because on the 4-hour chart, you can see what happens in pre-market and after hours. Come on. Why is this chart being weird? Let's go to the 4-hour chart again. but this thing went sub 2 right here. It went to like 197 pretty fast, and then it recovered that day really nice. So it closed at like 225 on, this is the 10th. And then in pre-market hours, it went to 198 on the 11th, only to rebound to 225 the same day. But that was an example where I didn't stop out. I just didn't buy more. When looking back, that would have been the opportunity of a lifetime, because I think it went back up to like $3. So you made $1 on those shares since then. But I think it's at 235 now, but it hit 3 before that, or 325, even 340. So you had a great move, but that was an example where like I wouldn't really want to be stopped out at $2 here, only for it to rip back up, because it was like lower volume and it was like peak fear, like the market was down that day and everyone was like panic selling in pre-market, and it was an easy, it was an easy one for you to kind of look back on at the end of the day and go, why did I sell that? I should have bought. A lot of times you look back at some of the stocks that you have a higher conviction on, and every time it sells off hard, you're like, why did I sell? I should have bought more, I think changing your stop loss to a limit buy sometimes is like the best strategy change that some people can go through. I mean, it's been good for me to a degree, not being stupid and just random stocks, but on my higher conviction swing trades, ELYS, VISL, for example, are two of them that come to mind where I like these a little bit. These are longer term swings. I mean, they're going to do their thing in the short term. I don't care if VISL goes sub 2 again, fine. I mean, I don't care. I'll buy more, right? But that's where I'll be buying more rather than panic selling out, right? Where I it's something I used to do in the past. So that is that. QS, interesting stock. I was in it just for a quick little swing like last week, and it fell below 24. So I was like, I'm out. But it could easily come down to $20. So let's see if it comes down a little bit more. It's been getting hit quite hard. I'm kind of looking at it saying if it firms up around this 22, 23 area, that's a good spot. But if it falls below and it gets weak below 23, 22, I would say if you can get it closer to $20 or even, dare I say sub 20, it's possible. But if you're going to buy calls on this, the way I would do it is I'd buy them far enough out. Give yourself some time. This is a stock, in my opinion, that I would even just play. I would rather just play shares just because it's got enough volatility in and of itself for me to play shares on rather than options. But that said, that with that volatility comes a lot more potential with options. So, take it with the grain of salt there. I would say that I would give yourself some time, a couple months, if you're going to trade option in this guy. But you might be able to get a better price if it does dip down towards 20 or even sub $20, which is possible, I think, in the future. So just give it some time, I think. Let's see. 5 years ago, I loved weekends. Now I have no use for weekends or holidays, and the market is closed. I hear you. That's the thing. I feel the same way. I mean, when it comes to this stuff, it's like, what do you do? Like, our futures go. Like, I wait for the futures to open up so I can at least see, how stuff's shaking out, and get a better sense to what to be expecting. So as of right now, I'm going to wrap things up, guys, because it's been over an hour. But futures across the board, small caps are the ones that are the most red. So we'll see how that plays out tomorrow. That'll be fun. But tech down about just under 0.25%. SPY, Dow down, just under 0.5%. So nothing too crazy. Tech has come back a little bit. It was down more about an hour ago. But yeah, that's that. I'll check on FRSX and then I'll wrap things on up. FRSX. Yeah, it's getting back down to $3. I think $3 is your support. Under 3, I don't know. But down towards 3 seems like a good spot. It has sold off quite a bit. If you're going to buy it here, risk yourself 40 cents of downside and then play it that way. Under 3, yeah, could it reverse at like 275? Sure. If you're playing it for more of a fundamental play, which I know some people are, different story. But I think $3 should be a good spot to be picking up some shares. I think it should hold up. Unless we see a much bigger sell-off in small caps, which, I mean, generally speaking, August isn't the best time. So we could easily see it under $3 if we don't get some news or some juice in small cap land. So just be careful with that. But I think that $3 will be the next area to watch as support. So I appreciate you guys for tuning in. Kramer was very bullish on QS. Now he appears to be less bullish and bearish. I think that's when Kramer goes bearish and the stock is at like recent lows. That's your time to buy some more. To be honest, Kramer's referring to C-Saving. Maybe I don't know. That said, NNDM, last one, and then we'll wrap things up. Appreciate you guys for tuning in. NNDM, down here towards $6 is good. I think it's getting down to a really nice spot. It even put in on Friday a potential reversal candle here. We had a doji and then a green day. So this could be reversing from here, but if you're going to buy it here, give yourself a little bit of powder to add it down towards 6 if it does come down there. But that's the spot I'd be watching. So I appreciate you guys for tuning in. Thanks for sticking with the mic issues early on. Hopefully it's ironed out. I got the new mic. A couple other things I have to fix. I have one more piece coming, but I generally speaking have everything hopefully under control. I appreciate you guys for tuning in. I will catch you in the next video. I'll be traveling Wednesday, but we'll still do the live Wednesday morning for the market open. I'll be traveling in the afternoon, so I'll still do the live, and then I got to leave. But appreciate you guys tuning in. Peace.